If you're a home buyer, a realtor, or financial planner, you should pay attention to what we're about to say because this could save the home buyer thousands of dollars. So there's a new sheriff in town. Actually, it's not a new sheriff. The sheriff's been around for a long time, called FHFA. And FHFA are making it harder for people to do conventional loans. The interest rate's about to skyrocket starting May 1st. Now, it doesn't affect government loans like VA and FHA, but jumbo loans are what we consider non-QM loans, so also not affected by this. But the conventional loans are about to get a lot more expensive. Shane, why don't you share with them what you found out today?
Yeah, so basically FHFA, as Barry mentioned, we don't need to get too deep into the weeds, but they've implemented these new LLPAs, or what are loan level price adjustments. What that basically means is there's a matrix that shows where there would be adjustments to interest rate depending on what criteria a borrower or a home buyer has. With this new rollout, typically in the past, if you had a 740, 760, 780 credit score and you're putting 20% down, a good amount of collateral, you get a great rate, right? It makes sense. They're evaluating risk. There's less risk when you have a higher credit score and more down payment. That's kind of gone out the window with these new changes. I mean, there are so many nuances and changes that essentially what we're talking about is that same borrower that is putting 20% down with a 760 credit score, 740, they're going to have a hit to the interest rate or a higher interest rate than, say, someone who has a 680 credit score and is putting less money down. Again, frankly, confusing. Not only are borrowers confused and realtors confused, but people in the industry are confused. So like, how does this make any sense? I mean, there's so many different changes across the board. It's really hard to pinpoint for anybody, especially for a consumer, how this makes sense for them and what it changes. So I'm seeing a lot of discouraging information, a lot of news outlets that are saying that, oh, the administration's screwing everything up. And it is unfortunate, but Barry and I have figured out a way to pivot from that and to really utilize a different program to ensure that the borrower's costs and the overall monthly expense is down, even if they have high credit scores, good down payment. And that's essentially utilizing an FHA loan as opposed to a conventional loan. So FHA is normally associated with first-time home buyers. You don't have to be a first-time home buyer to use it. But the difference between the conventional interest rate when you have, again, that 740 FICO borrower that now that score, that interest rate's gone up, and an FHA loan with that same borrower is massive. I mean, I ran a scenario where a borrower that's putting 20% down and they're going with FHA, their interest rate is almost 1.5% lower than what it would be with a conventional loan. So an incredible opportunity. Although there's some bad news, there's some good news that comes along with it. And that's going to allow home buyers and realtors, your borrowers, to make it happen. Now, a lot of people, realtors across the board, they're kind of fearful of using an FHA loan, but the FHA loan isn't something you should be afraid of. And Barry will tell you exactly why.
So, guys, first of all, great job, Shane. The reason why FHA isn't affected by this is because FHA is governed by Ginnie Mae, which is a different government-sponsored entity, and also VA is not affected. It's strictly conventional loans, and I know that not all the time, but a lot of realtors sometimes are nervous about an FHA loan because they think, well, it's going to be harder to get an appraisal done. Well, they are a little bit more stringent on things like chip paint and stuff like that. But if you know that we're going to be doing an FHA, you just want to make sure that you keep that in mind. The good news is a lot of realtors think that FHA takes longer, but the good news is Shane and I just closed an FHA loan in 15 days. 15 days. So we can still close very quickly on FHA. We have, incredible interest rates compared to the majority of the industry out there on FHA. And I really just kind of want to drive home, if you are a consumer or you are a realtor, we don't expect you to know just on this little short video that we're doing all the different nuances. Like, let's get together. Let's talk about both scenarios. Let's play it out for you to see what it means to you. We've used FHA, Shane and I, for years to get people into a home with the idea that as time went on, we would refinance them out of that FHA loan into a conventional loan once they had enough equity and it made sense financially. So there are benefits, believe it or not, to doing an FHA loan. Aside from actually using it to buy a home, you can do a streamlined FHA refinance when the rates go down pretty quickly. So guys, we're going to be doing a webinar next Thursday. What's the date, son?
Next Friday, it's going to roll out.
Next Friday.
28th of April, and you'll be able to watch it recorded. Really, we're going to go a little bit deeper. I mean, we've gone, just surface level for this, but we don't expect you to know everything about it. Like Barry mentioned, if you have questions about it, if you're confused, if you're discouraged, or if you're excited, reach out to us. Let's get together. Let's chat. Look forward to that webinar coming out next Friday. And thank you guys for joining us.